All right, guys, so I'm really excited to have our boy Trey back. So what's up, man?
Good to see you again, buddy.
It's from Christian Baker. So we're gonna have a discussion for y'all around the sexiest, most fun topic, insurance. But before that, Trey, can you rap a song for us? Like G-Thang.
Lose yourself in the music the moment you know it. You never let it go. Only give one stop. I don't remember the rest of the
That
lyrics.
was really good.
That was good.
So we're trying to make insurance cool for you guys.
Yeah.
So please, let Trey know to not rap ever again. So, well, listen, man, let's kind of dive into this. So it's good to see you, by the way.
Good to see you as well.
Yeah, so where do you want to get started?
Yeah, let's discuss some of the emerging topics we're seeing in the insurance industry, a lot of trends specific to the wildlife and pest control industry, and we'll see where that takes us.
Yeah, so, I mean, you deal with it all the time. I mean, between probably you and I, we probably talk to more owners and operators than probably anybody.
Anybody in the country, I would agree.
I mean, how many owners do you think you talk to in a month?
150.
Right.
Yeah.
Right. So you're talking to 150 owners a month, and I know you're focused on insurance. We're talking to probably similar amount every month. And so we're hearing the noise. And so, one of the things, like, I want to kick this off. So, like, one of the things, and I'll tell you this, man, it irritates the shit out of me.
Sure.
I'm sitting here looking at P&Ls today, and insurance costs are just going up. So can you, like, talk about that as a whole? Because, like, I'm talking to owners, they're going up, and it's just tough, man. It's tough on these guys.
It is, absolutely. And it's been a struggle these last couple of years. I would say industry-wide, we're noticing 15 to 20% increases across the board on the commercial auto, specifically property. Everybody's familiar with what's going on, unfortunately, out in California. We had the coastal flooding in Florida. So again, what we're noticing is that trickle-down effect. So just because your company is domiciled in Iowa doesn't mean that those companies who insure businesses in property in California, in Florida, aren't going to increase your rates, because again, they have to play catch up now.
I think people forget that insurance companies are businesses. And, I think that sometimes people look at insurance as almost more of a charity is the way they think about it.
Right.
And they have to realize that insurance companies have to make money, right? And maybe we think it's unfair, maybe it isn't. But at the end of the day, like, when they're doing the right thing, like, which a lot are,
sure,
like, it actually helps a lot of people,
Absolutely. So, and there's a methodical way to handle your insurance depending upon your size of your business. What I try to stress to our clients is, listen, this insurance policy, it's not a maintenance policy. One of your traps gets damaged or stolen. That's not what insurance is for. We need to really push on the self-insurance side of things to protect the business's overall loss ratio. Now, again, you total a truck, that's what insurance is for. Yep. Heaven forbid, there's a fire, a catastrophic loss, we call it in the industry. That's what insurance is for. Not for your, minute claims that you might see out in the field that cost the company $500.
Actually, let's talk about that, because, as simple as that sounds, it's something that people don't think about. And I think it really matters. And so if you sit in your world, right, in your world where you're going to take any customer's call as soon as it possibly calls,
sure,
how often are you actually taking that phone call to where somebody, I don't know, someone has a bunch of traps on a truck and they all fall off and they lose $1,000 in traps? Like how often are you dealing with stuff like that?
Pretty frequently, I would say, as far as the catastrophic losses we mentioned, our industry does a great job at preventing those, and we don't see many of them. But again, I would say over the last 25 years, we actually compiled our loss data, and the number one claim that we saw in the wildlife or pest control industry was technicians falling through attics or crawl spaces. We get this preconceived notion that, I'm sure you guys see all types of animal bites, pest control claims, oversprays. And we see a few of those from time to time, but it's really just the technicians coming down through the attic is the number one claim we see across the board. And it's not even close.
We hear about it every week, right?
Sure.
And that's, I never thought about tying that to like an insurance matrix. It's It's pretty interesting.
Right.
So, I mean, what else? What else is going on in the world today? I mean, what else are you guys thinking about?
So again, we have our niche program right now. And another thing that is confusing to a lot of insureds is, how does the insurance companies rate our business? How am I responsible for the premiums that I pay? And we do things a little differently. So again, if you were going to start a pest control business, you would say, hey, Trey, I need general liability. Let's start there. I said, okay, Seth, what do you think your business is going to do this year? You say, let's target $300,000 in revenue. Sounds good. That's what we tell the insurance company. Fast forward 6 months, you land a couple large lucrative commercial jobs. All of a sudden that 300,000 is now 800,000 or pushing $1 million. And then at your renewal, the insurance companies have a way of congratulating you with your successful year with an audit. So again, no matter what you guys do, that's you're going to be paying for it. What we do is a little different. We rate based upon the number of technicians out in the field.
That's great.
So again, what that promotes is get your guys in, push the revenue with your small group of employees or technicians, and regardless if you do 500,000 or 50 million, your premiums are going to be the exact same.
Yeah.
And whenever you're, planning financially for the future, that's important to not have to play that guessing game on the audit. So there's a lot of monetary cash flow and security there year in and year out. You know what you're going to pay if you add a technician, and there's no audits.
It's super interesting that you say that, because that is probably one of the biggest things that people work with you bring back to us, is that it's easier to understand their pricing. One of the questions we deal with every year around renewals is, hey, we did 5 million. Our insurance company, we've told them we did 1 million, and we've never been audited. What happens if we get audited? So what does happen to a company if they get audited?
It's a great question. We've had several scenarios this year. We were fortunate enough to pull some businesses over to us, and we got the same question, and they do reserve the right to go back and require that company to pay the remaining premiums.
How often do you see that?
I would probably say 25% of the guys that come over from a gross revenue liability policy, because again, you have to think about it from the insurance company standpoint. They're essentially losing the business. And again, it's not, their intent isn't, hey, you guys left us, we're going to audit you, but it's part of the process as an exit strategy for an insurance carrier. Hey, we had these guys, let's take a look and request the revenues from the last 3 to 4 or 5 years. They can audit you and require you to pay all of that premium back.
We've seen it, man. And it's it's probably one of the most uncomfortable discussions to have with an owner, because we're talking to an owner and look, I totally get it. Your company, you do 1 million, now all of a sudden you're 5 million, and you haven't been audited for whatever reason.
Sure.
And now all of a sudden you're $4 million higher. And the bigger question I always ask these guys, I said, listen, you should be as upfront and honest as you can.
Absolutely.
Because the other part, and I don't even know if this is accurate, but this is what I talk to people about. I said, if they come back and you did not have the right insurance or the right coverage, and you didn't report this correctly, that's essentially fraud. And I go, they can maybe be able to walk away from you. And I don't know if that's true or not, but
yeah.
they might
Do
be
you
able
see
to.
that much with your consulting business? Do you see guys that, bank on the audit process basically never rolling out and undercut on purpose, or most of the guys pretty upfront, with their revenue projections?
So I think it's hit or miss.
Yeah.
And I think that our discussion is always about keep it above board, always above board.
Absolutely.
But in some parts you have to talk about when the rubber meets the road too.
Sure.
And sometimes what those conversations are what they are. But yeah, it's this is when I see it the most. I see it the most when companies are going high growth, like super high growth, and they haven't reported, and they are going, hey, we're not going to get. They don't even think about getting an audit, right? They're just waiting.
Right.
And then all of a sudden they get the audit, right? And then it's always the same conversation. I get a phone call. Hey, Seth, I got this audit coming. Hey, I need to talk to you about something, because we don't talk about this in the front end, right? And so I get the phone call, and it sounds like this. Hey, man, so I got this letter from my insurance company, and they're going to have an audit, but I want to talk to you about what we should do. So I told them that we made $1 million the last couple of years, and I told them we didn't have a lot of growth, but now they want to come and look at our stuff.
Sure.
So, so what do I do? And I go, dude, you're gonna get paid. You're gonna have to pay.
Yeah.
And the reason it's an important conversation why they beat around the bush is that they want to use their capital for other things, and now they know they're gonna get a huge insurance. And that's typically what you see: high growth.
Yeah.
Companies that haven't had to report, they get the letter. They haven't thought about it until they get the letter, but they've deployed all their capital towards growth or towards something else, and they get hit with
Now, in your business, do you think the underreporting, could that have any negative effects on M&A in the future? Do you think they would look at something like that?
I can't speak to the actual M&A process around it, but I think that if we were sitting here with some of the guys, I think that, so look, let's talk it from a real buyer. I think that a buyer, if they look at a business and there's dishonesty in the business, or that, and maybe it's mistake, maybe it's not.
Oh, absolutely.
But let's say it's dishonesty. I think it just raises a flag, right?
Yes.
Like, I don't know, there's other people that can answer that question better, but I think that if I'm looking at a business to acquire, or our clients are for that matter, and I look at it and I find anything that I can put the pedal down to drive the value down.
Sure.
Or alternatively, something
that
I need explanation on. If I need explanation on something, like we're gonna present a lower offer, right?
Absolutely.
100%. So
I have another question for you. Your pest control clientele, what are you seeing, the top tier companies doing from a hiring standpoint? And specifically as it relates to insurance, what we've really put an emphasis on now is hiring quality drivers, obviously. But again, good people, they're a direct representation of your business. They are the forefront of your company. MBRs is a big issue right now. Again, somebody sits down for an interview, they may check the boxes. I basically tell all mine, because before you hire somebody, send over a copy of their driver's license. Let's pull the MBR. Let's catch it on the forefront, as opposed to, hey, Trey, we just hired this guy. Unfortunately, he has, 3 DUIs and a hit and run, and your insurance just tripled because of that one driver. So are most of your guys, are they taking an active approach in mitigating that?
I think it depends on the company. So the companies that we see do it are the ones that have had problems and never thought about it, right?
Sure.
It's always reactive. I would tell you that the companies that are better businesses who really want to hire the right people typically have that process in place, or it's something that in 2 seconds they put in place, right?
Exactly.
Because the cost of doing it is, how much does it cost you guys to run an MBR?
$1. It's irrelevant.
Yeah, so it's $1. Now some of them have more established processes.
Sure.
Maybe $100 to run the full background, the full reports.
Sure, yeah.
But the better ones, that's part of the process. You know what I mean?
And I think it has to be.
Yeah.
All it takes is one driver to completely skew your auto premiums.
Yeah.
And again, I think it's a great idea, and we've really implemented the proactive approach instead of the reactive. Because again, much easier for me to pick up the phone and say, hey, I know he checked the boxes. I'd probably walk away from this one, and here's why, as opposed to he already signed his agreement. He's part of the fleet now, and then we have to try and find a home for him. Again, people have accidents, at-fault accidents. That's not a problem. We can get you insured. It's the extracurriculars that really become a problem. And we've had scenarios where it seems like it's always the best guy, the best technician. He has a terrible MVR, and now all of a sudden we have to peel them off of the master auto fleet and piece him out to a standalone progressive policy. It's an extra policy, that the business owner doesn't want to pay, and it's just an extra headache. So I would really say that taking that proactive approach on your hirees, making sure that you're checking those MVRs, it's going to save you a lot of money in the long run.
Yeah, I think it's great advice. And you guys have done that for a lot of our clients. Like
Absolutely.
You broke those policies in half. And I can tell you this, I hate that conversation because like when they run into it, 'cause you've done it for a lot of people, like I hate it when somebody has two or three auto policies.
It's tough.
Well, it's just not clean, right?
It's a logistical nightmare. When does this renew? When does that renew?
But
great.
But yeah, so what else are you thinking about, man?
Not much, man. We're loving it. We had our best year ever in 2024. Looking forward to big things in 2025. Really want to continue to expand upon our market share, specifically in the pest control space. And we're excited. Have some big things in the works.
That's cool, man. Well, man, I'm glad to have you here, man. So
as always.
I appreciate it, man. So,
thanks, buddy.
You want to give them some motivation, man? Any motivational talk to the audience?
Motivational. I got nothing.
So you only talk about insurance? That's the only thing you got?
That's it.
So guys, no motivation from Trey. He's happy to rap for any one of you guys. So for anyone who catches Trey, he's in a sales process, trying to close a deal with y'all. If you make him rap and send it to me, I'll send you a special gift. Y'all have fun. See you guys.
Thanks, guys.